Let's go ahead and break a leg. Start webinar and start.
Recording in progress.
Good afternoon, everyone, and welcome to Simpler Trading's February Trader Call, exclusive for our members and everybody on YouTube. So I guess exclusive to the world, exclusive to those of you smart enough to be here right now. That's what we're going to go with. We are pumped to dive deep into the 2026 markets with you right now. And I would like to say that we are welcomed by the unstoppable Lorna Bott St. George. And we are also featuring an all-star lineup this afternoon. We have the VP of Quantitative Analysis, Mr. David Starr, the Senior Managing Director of Options Trading, Henry Gamble, Senior Director of Options and Income Trading, Bruce Marshall, and the VP of Options, Sam Shames, here with us today. These pros bring quantitative firepower, options mastery, income strategies, and macro momentum to deliver cutting-edge insights. Get ready for some killer discussions on AI and trading. We're going to talk about some of the top sectors and sneaky risks bubbling under the surface right now. We're going to talk about some recent wins and tough losses and what separated them, more importantly. Plus, we're also going to talk about some of the routines we use to start our days and weeks off strong. All right, I think that gets the heavy stuff out of the way. This session is loaded with actionable gold to power us through the rest of Q1 and ready to dominate 2026. I'm excited and hyped up. You know what? Hard part's out of the way. Let's get to the fun stuff. Floor is open. It is all yours, Bot. Take her away.
Oh, thank you, Daryl. You gotta love that voice. It's just not simpler without the Daryl voice to start us off, right? All right. So first off, because otherwise Jerry will kill me for forgetting this. If you're having issues, you can refresh, or you can just join us on YouTube, on our Simpler Real YouTube channel. So there's that, but I might not necessarily see your questions, so it's good if you're in the Zoom. Second off, because we love our customers here at Simpler, please note that you will be getting notifications on this, but March is Customer Appreciation Month. We've got a whole lot of stuff coming up. Kicking it off with some special bonus classes, starting with Mr. Shames right there on all things butterfly. So that's coming up in the first couple of weeks of March. So pay attention to that. Next up is, after this call tonight, Mr. Carter will be doing the last of his webinars for the Squeeze Ultra. You all have been seeing it on a lot of our charts. So come and join us. Hammer us with questions. That'll be fun. And lastly, Jerry will be sending out a survey towards the end of this. This is where we're going to get your questions, and I'm going to kick it off here with the questions that we got from last time's Trader Call. So if you have burning questions that you want to ask, that's the way to do it. All right. So first up, let's talk about some AI trading. Y'all ask about this all the time. So the question is, let's see. I got David, Bruce, Sam, and Henry. So that's kind of the order I'll go in. All right. AKA Voodoo Daddy. So are you incorporating any AI tools into your trading in your process in any meaningful way?
Yes. So I have a few LLMs running here, and I use mainly ChatGPT and Claude. And the main thing is that right now, these things are still mostly tools. They know a lot. Their judgment is highly variable. So these are things where you can use them a lot if you give them direction and if you give them objectives. So if it's the sort of thing where you're sitting there trying to work out a new strategy and you want to tune it and back test it and consider some different things to factor in, as long as you're really clear about what you want to do and what things you want to try, it's a great little companion to have next to you, give you some ideas, bounce things off of, those sorts of things. But as a, hey, do this for me, without building up that knowledge that it already has by teaching it what you do, it's not terribly useful, if that makes any sense.
Makes a lot of sense. Bruce?
I am actually not really using any AI for for trading systems or anything like that at this point. Of course, it is it's basically replaced, of course, Google, that type thing. To get tons of information, I am also, like David mentioned, I'm kind of skeptical of what we get because a lot of the stuff around trading that I have looked and put in Chat GPT primarily, it's not 100% accurate. Um, and get some wildly varying, you know, ideas from it. So the bottom line, I don't use it for, I don't, I'm not using it yet, like for trading, building any kind of thing for trading. I use it constantly from, personal standpoint to, do all things that make everything more efficient, but not from a trading standpoint.
Sam, are you using it in any way?
Not directly, no. The way that I use it is just really to answer questions that would normally take me an hour. So, for example, the other day, somebody mentioned some stock that I've never heard of in the chat, and I looked it up, and it looked pretty good, but it wasn't tradable. It was very thin, but it looked so good that I was like, well, why don't I ask AI what is some large cap companies that are similar? Right? And then I just kind of take that idea and move it along to something that has liquidity. So yeah, I use it in a very, very, very basic way. I'll probably be the last person that starts to use it. I'm just not very technologically savvy. So for now, I'm just using it as a really smart assistant.
That's to me is the best use of it because it can't do simple math. I'll just tell you that. I often have to tell it, no, that's not right. That's not how you do multiplication.
Yeah,
Are
that's
you
what I
using
find.
Yeah, so I have been using AI for a while. I know the trading point is of course our focus, though the AI art and generation for that I've also used a lot. I think that actually brings a lot to presentations. Before where we'd have to have a graphic designer and you would have to relay your ideas and that process alone would take weeks. Whereas now I use AI to create everything that I want to present in that way. And I think it's really good. I mean, it's fast. I think it makes presentations more engaging, and I really enjoy doing that. The other way that I use it that is more focused on trading, actually, I was in the room just the other morning, and a trader had mentioned to me the symbol keys, KEYS, and then also ALAB. So these are two names that we were looking at that are kind of in this AI infrastructure space. And I was like, well, I know ALAB really well. I don't know keys that well, but I know that I like the space. So I asked the AI engine that I was using, Perplexity, to give me a list of symbols that would be companions to this, things that I might not be looking at every day, like NVIDIA and everybody's on Micron, but give me stuff that's a little bit under the radar with a smaller market cap. And it gave me a great list. And then it's things that are, very, very simple, but still make your life easier. So I took that whole list and then I said, can you put that into a file that I can import into TOS? And it's faster than I can think to get it done. There's the file, imported into TOS. And then I use my radar screen to look for those that are squeezing. So it's not, it's not a replacement. Like it's not quite to the point of just putting money in your bank account, but can it streamline some of the stuff that you're trying to do? Yeah, I think it's very good for that.
Yep, I'd agree. It's a great assistant, but there are a lot of people. I get a lot of questions from people who are like, "Well, can you use it for algo trading? Do you use bots and can you program it using Chat GPT or whatever?" And I'm like, "No, it just no. It's they're most of them are trained on language, so they're really good at presentation. They're fantastic at art, but they're terrible at actual logic, is what I've found. And it doesn't matter which one, pick one, right? They can search the web instantly, right? A lot easier than we can, but they still don't understand context and markets and math. Basic math. That's kind of a key when you're talking about the trading, right? You got to kind of understand math. All right. So from a bigger picture standpoint, now that we've sort of talked about that and how we use AI, what are y'all focused on right now? What sectors? You know, tech, industry, defense. What are we looking at? David?
So from my standpoint, one of my main ideas right now is that I think we're late cycle in the move up from April. So a big part of what I'm focused on is just less, right? I think that what we often see late cycle is fewer leaders, less participation to the upside, less strength to the upside. So I want to be much more selective in what I look to, and maybe even play the indexes more than individual stocks. Because if it's going to be harder to figure out which stocks are going to succeed, then maybe we don't play the stocks individually if we think they're going up. With that said, the two spots that I'm kind of interested in right at the moment are tech, healthcare, and um, maybe soon consumer discretionary will come back around. So those have not been in favor the last couple of weeks. They just seem to be coming around in the right position in the relative rotation graph, which is one of the tools I use for looking at which sectors I want to favor. And while everything else has been stronger, it looks like those might be exhausting. So that's kind of where I'm focused on, sort of right at the moment today.
Do you see anything that has potential risks that you're going to just shy away from?
Um, well, the risk is just right now that we roll over and it takes everything down with it. So I don't think we're there yet, but that is obviously the worry. There are some warning signs on the horizon. Like I said, the patterns suggest sort of late cycle. We're starting to see some Hindenburg omen signals pop up. We had one the day before yesterday. We had one a couple of weeks ago. When you have two on the clock at the same time, again, I don't think it's anything imminent, but it is typical of sort of that late cycle behavior. So we got to be more careful than we were, sort of May, June, July, August of last year.
You can't just buy all the things, huh?
You can do whatever you want, but I just think while I still want to be long, I want to be less long.
Shorter long. Okay.
Less long. Yeah. I would say be more selective, much more selective. But we have had since the first of the year, obviously a big rotation, in the market, out of tech, into industrials, infrastructure materials, things like that. I've been focusing there a lot, and it's been working. Of course, you still have to be very selective, you know. Um, and I am looking at tech, but if you look at, like Microsoft, for example, some of the really, really high quality names that just you're not doing anything, right? So there's no, I'm not hanging. I like those names. Maybe sell some cash covered puts or something, whatever. But I don't think you're going to get the big bang out of those in the short term. So I'm not avoiding those, but I'm being extremely selective, with those names. And again, focusing on industrials, materials, kind of the infrastructure build out theme there's still a lot of good play there. And that's going to be a very long-term theme to play out as well. Had some pretty good luck in the financials, and a little bit in the retail discretionary as well. But again, it kind of goes back to, stock selection and, just looking at the charts, honestly. And I know the follow-up was risk, what's potential risk out there. I don't see a, black swan-ish kind of event on the horizon. Of course, a lot of times you never see those coming, but the potential would be a possible, the Fed is now alluding to a rate hike. I mean, it's a, a 3 to 5% chance or something. It's not much, but they hadn't mentioned that before. And if inflation doesn't start cooling off, we're going to have a longer cycle of, or longer wait on rate cuts. And that the market's not going to like that, I don't think. So, I don't know, very, weird place we're in the, in the overall market right now. it's been good, selling premium range bound, wide range bound premium selling has been very good the last couple of months. So take it day by day.
I like
That's
it. I like
that's
it.
all we can do.
Sam, what are you focused on?
Mostly just the same thing everybody else has said. I mean, we kind of cover this all the time. It's semis, it's going to be metals, building off what Bruce said, infrastructure, specifically electrification. Basically, just ask yourself, like, what is the pipeline to get to the next world that we're going to collectively live in, right? If we're all going to be collectively living in Ready Player One, how do you get there? And I think one of the easiest plays on that is actually Taiwan Semi, just because no matter who wins the semiconductor war, it all goes through it all goes through Taiwan. So whether you want to bet on Nvidia or any competitors, I think that's kind of the nexus for it. So just things like semis, because that's the world we live in. Things like metals, and then on a much longer cycle, I actually kind of like oil. Not a super easy thing to say. I actually don't really personally like it, but I think there's a setup there that could see it squeeze higher, basically as a basket of commodities. Because basically what they're telling us is that they're purposefully and happily willing to torch the dollar. And if that's the case, then multinationals, Caterpillar plays great for that. Metals, obviously, commodities, infrastructure. So just all those things.
Henry?
Sure. So some of my biggest focus, again, a lot of this is repetitive just because I know we look at so many of the same things. And I think if anything, the fact that we're all identifying the same sectors speaks to the fact that the setup is there, right? None of us know exactly what pattern it will unfold in, but I think those sectors that are mentioned are great places to focus. I think they will offer outperformance, especially if you can say in the months to come. Like exactly where we're at next week is always a little tougher to call than where we will be 3 or 6 months from now. So I think tech and semiconductors are a great place to focus. I know Sam has mentioned TSM, and I think ASML goes right there in with that. These are slightly less liquid names, and they don't have as as a forgiving options chain. It too is a little bit thinner. But I think if you can really be patient with it and give yourself time, those are areas that are really going to do great. And then the precious metals, that's where I've done most of my physical investing is in certified coins. And I think those tend to do a little bit better than just straight out bullion. And they've been doing great since, the middle of last year. So if it's not broke, don't try to fix it. Keep focusing. I mean, right? You've been in those gold trends for how long? And it's not second guessing the trend. It's just looking at the moving averages, looking at the structure of it, and going with it until it breaks. So that's a lot of what I've been focused on, and then just day trading the SPX.
It seems the way to go. Yes, I love the metals. Gold has been an amazing trade, and if rate hikes happen, gold is going to skyrocket. I still keep seeing estimates out there that 5,300, 5,400 is kind of the base, the lowest that most of the larger institutions are seeing it at. 5,600, of course, just because I hit it there earlier. But so that should be interesting, right? And if the dollar is smashed, money's going to gold, right? It's a currency question as well as a safe haven. So with the geopolitical tensions and all of that, metals might be a reasonable place to play longer term while we scalp the indexes. That's kind of way to go. Okay, so I'm gonna. I know, Sam, you have to leave a little early, right?
No, I think I should be good. Maybe
okay.
like 5-10 minutes.
Okay. So one of the questions we got was, how do you decide? This is a really good question, actually. How do you decide which time frame to trust when there's mixed signals? For example, when the daily looks great, but intraday is weak, or vice versa. Like Netflix is a great example. Netflix had a 15-minute squeeze setting up and was looking good in the day, but if you look at the daily chart, it's still a dumpster fire. How do you deal with that, Voodoo Daddy?
So for me, for the most part, and I'll give you a few exceptions to this, but for the most part, I only trade things that are in alignment. So I know that there are other folks at Simpler who believe differently, who say, "Hey, look, if I see something on this time frame, I'll ignore the other stuff. I will just trade that." For me, all right, I find that intraday patterns in the direction of the daily trend are going to work the best. So for myself, I only look for trades where things agree, and therefore what I do with things that don't agree is I just say, hey, I'm not going to trade it, right? I don't have to trade everything. And one of those directions that you might have if things disagree may be right, but I don't. And if you get it right, you're going to make money. But the question is, do you have any reason to think that you have a better chance of getting that one right? And my answer, at least for myself, is I don't. So I'll put that to the side. Now, the exception that I mentioned at the outset is if I have very clear signs that my longer time frame trend is exhausting, that it looks like it has completed, and I have a short time frame pattern the opposite direction, then I will trade those two in opposite directions. But that's a very specific sort of thing, generally based on my Elliott wave view of the indices finishing up. And that's mainly because if I'm trading that reversal, I want my tighter risk control of going the opposite way from trading against what has been the longer term trend on smaller time frames where my stop can be nearer, my risk control can be tighter, those sorts of things.
Okay. Mr. Marshall, are you a multi-time frame kind of guy?
I am. I'm agreeing with what Dave was saying because 90% of the time, if something, generally speaking, something's on the 200-day, I don't want to touch it. Just, walk away because there's so many other things. I can find setups all day long, and I evaluate each trade or each setup, just do the simple math and you're like, well, this might work, but it's got a lot of risk, or this one is easy and it doesn't have as much risk. Okay, we'll take the easy way, right? But lately it's been exactly what Dave was talking about. And you mentioned Netflix. If you look at the chart and you didn't know it was Netflix, you didn't know what it was, you would never touch it because all the moving averages are, horribly flipped upside down, et cetera. For a counter trend trade, yes, with some tight risk parameters on it, that kind of thing. And I will acknowledge I did that with Amazon. We're under the 200, we're under the, all the moving averages, across to the downside, all that kind of stuff. And I went in and nibbled on Amazon when we hit, I guess, under 200 about a week ago or so. And so far it's paying off, but that, again, tight stop and all that kind of stuff. So, it's more a honey badger kind of scenario when I do something that you know, that the charts just don't agree with. And if I do that, it's going to be a, very tight risk control type trade. Now, the question more specifically was like, what if they don't align small time frame chart versus longer time frame? My trades I tend to stick in the, from weeklies out to 30, 45, 60 days out. That's kind of my window, maybe a little bit longer than some people because, I don't trade as much zero DTE or that kind of stuff. So I really only use the really short-term charts for entry and exit if I'm trying to get a trade on that's a longer, and I say longer, 30, 45 days long term, for me. But I'm looking for an entry or an exit, then I will go to those, to get confirmation on a super short term basis, like a daily chart or even a 120-minute chart or something like that.
Sam?
So that's how I use it.
Yeah. but you have a process.
Yeah,
That's the
absolutely.
thing. Do you align timeframes, Sam?
What was that?
Do you align timeframes, or are you just trading off of whatever chart you're trading off of?
So the question needs more information because it's not fully fleshed out. So here's what I think is the premise of it. If you have a very bullish daily chart, but the intraday is a mess, what do you do?
Right.
Or rather, very bearish chart, bullish intraday, what do you do? The reason I say it needs more fleshed out is because we don't know what that person is trying to do, right? Are they trying to go with a daily swing trade and kind of dealing with short-term messiness, or are they an intraday trader and are concerned about lack of edge of trading an intraday bullish pattern in the context of a daily bearish pattern? So there's that, but I'll just approach it from a general way of looking at it. So let's assume that the daily is really bullish. The intraday is kind of a mess, but I'm looking to swing trade the daily. Then at that point, it becomes very simple. All I do is just um, mentally check off the daily as being good. And then I go to whatever time frame, whether it's a 4 hour or a 1 hour on the intraday, and I wait for that to turn. Right. So from with my system, it would be an arrow. Let's say that the weekly daily are perfectly bullish. The hourly might be neutral or bearish. Let's just use the hourly. Then I would wait for an hourly turn signal, an arrow on the hourly, and then that would create alignment across the board. Because the way I look at it is, let's just use 3 time frames here: weekly, daily, hourly. Right. So weekly is the big one, hourly is the steering wheel. If the weekly and daily are already good, that actually makes things pretty simple, because then all you're waiting on is just the hourly to turn. And if the hourly never turns, well, you just don't do anything. And there are times where the hourly will not turn, and then that'll have a feedback loop into the daily, right? The daily will start taking damage. And then at that point, the trade should be, there's no trade. But as long as the daily chart is not taking any damage, what I like to do is just wait for the hourly, in this instance, the hourly, to give me a turn signal, and then I have full alignment across the time frames, and then I just trade it that way.
Henry, are you differentiating, or are you looking for alignment across? I mean, I know you have a lot of intraday, right? 1 minute, 3 minute kind of stuff when you're watching the indices, but
Yeah, so it's a really flexible question, and it's something that I think can really be tailored to whatever you want to do, right? So if you have the ability to trade 1 minute charts and to day trade, you can kind of get away from looking at the biggest picture. I mean, I still generally like for that to be in a weekly and daily alignment if I am day trading, but I just think that it's such a different way of thinking from a swing perspective and this bigger picture outlook versus just saying, I'm going to approach each day fresh and whatever I'm given, I'm going to try to ride that intraday trend. So I would tell you first, just try to separate it between, are you swing trading, even stuff that's 3 to 5 days, and especially if longer, that is one frame of thinking. Then the other is just intraday, where you're going to look at much smaller time frames and you're just going to kind of take what the day is giving you. So think about that first to kind of separate what you want to do. And then if you want to do the swing trades, the longer time frames where everything is in agreement, the things that tend to stop the moves the most are big psychological price points and Fibonacci extensions. So that's to say, in 2 examples I can give you, and I'll just do this all verbally. I'll show it to you guys if you're in the room tomorrow. But I'm just looking at a chart of Intuit because Intuit had earnings today, and back here in it was July of 2025. I mean, the stock looked amazing. It was printing a new lifetime high. So you look at that and say everything is aligned bullishly, and it completely failed. Well, it failed at the 1272 extension almost to the tick. So it's just knowing the trend is going to be very strong as you reach extensions, and that works to the downside as well. So be mindful of those extensions because moves tend to terminate at extensions of previous swings. So all in alignment, try to work with that unless you're extended. And then the other thing are psychological price points. There tends to be more that goes into this because of options flow. right? It's not just a big round number, but think about how the SPX was so strong and it was basically kind of going straight up, and then it hit 7,000. And then 7,000 is this big round number, and the lifetime high in this moment is 7,002. So that's just where you're like, all right, everything's bullish. I'm going to take this bullish aligned trade, but it's stopping at 7K. So, just be aware of that in both directions. Like Microsoft, it was wildly bearish, but it hit 400. And then that big psychological level helps put in a little bit of a bounce. So again, day trading, you can focus on super short-term stuff and ignore the rest. Bigger time frames, try to line up as much as you can and just be aware of extensions and those big targets.
Well, I tend to do kind of a hybrid. I don't look at multi time frames. I don't really care what the daily is doing if I'm trading on a 5-minute chart, because it really doesn't matter to me. The daily might be really, really bearish or really, really bullish, but there's some great setups if I'm day trading, on a 5-minute chart and I'm looking to take 10 or 20 points out of something, right? It just doesn't matter.
I think it's something that's very important to learn, and especially because of the phrase that I've liked lately, that so much can happen in a day.
Mhm.
You can look at a chart that looks so great and bullish, but then the S&Ps lose 100 points in a day. Well, that's where it's good to have the day trading skills to be short. So again, I would just try to separate it into those two ways of thinking, and those are the helpful topics that come to mind for me.
Yeah, I like it. It is really helpful to be able to switch gears. Swing trading hasn't been all that great of late, but day trading has been spectacular, right? Because we have had movement and we've had some volatility. So swing trading, if I can't find anything, I'm long gold, as you know, because I like gold, but there's not a whole lot else that I'm long right now, because we've been in just chop, right? We keep hitting the same ceiling and popping back down, but we're in a really tight range. So instead, I've shifted my focus mostly to day trading. So it doesn't mean that I can't still extract money from the markets. It just happens in smaller chunks. That's kind of how I look at it. And there was a follow-up question from Papillon, who said, I saw it. How many time frames have to be aligned for you, David?
So I don't know that it's really about them all being aligned as much as it is for me. Look, I have a hard time mentally shifting gears. And so if I'm running a lot of things in one direction, it's hard for me and looking for setups in that direction. So if I'm generally bullish and I'm looking for bullish setups, it's hard for me to, even if there's a great short-term setup, to trade the other way. Again, there are exceptions. I will, if I see something really clear on the indices, go the other way for, a few minutes or something like that. But for me, it's the exception and not the rule. So, so from that standpoint, it's not that they have to be necessarily in alignment as much as it's a situation where if I'm going to be trading a short-term chart, I'm going to be looking for setups in the same direction that I think it's going in. So it's not that I have to have, 2 or 5 or 7 timeframes in alignment. It's just that if I think the daily chart's heading up, I'm mostly looking for bullish setups on intraday.
Does anybody, I'll just throw this out there, do any of you guys use the smaller time frame charts when you're looking for a setup on the daily, just for an entry? Is that
absolutely
okay? So you're looking for spots on the intraday that you won't necessarily see on a day chart, a daily chart.
I'll do that. I'll look for day trade opportunities in the direction of the larger trend. I'll do anything, all of those things on shorter time frame charts.
Vincent says he went skiing all day because sometimes the best trade is no trade. I'd have to agree with that as well. If you don't have a setup, no trade, right? No trigger, no trade.
Yes.
Right? Where have we heard that? Oh, right. Fib Queen and Roggy. Those are two favorite sayings. No trigger, no trade. So it doesn't really matter, honestly, right? If you don't have a setup, then don't force a trade on a lower time frame if that's not what you're looking for. that's probably the best way to do it. Daniel asks, how have you been managing and or trading silver? I know personally I haven't. Silver is a wild child that I can't trade it. But gold, yes. Anybody else? Anybody trade silver here? Anybody had a silver trade in that crazy?
My last silver trade was in 2011, and I haven't touched it since, and I'm not gonna.
Henry, you had any? I thought you were looking at SLV, but that might have been somebody else.
I look at it a lot more lately after it has really started to trend so well, but I'm similar to David that I remember the year, and it was 2014 for me. And I had just gotten kind of whipsawed in trading precious metals. And I was like, I really want to have exposure to the sector, but I'm tired of trading the options on it. I wanted to focus on Tesla, Nvidia, things of that nature. So I took whatever cash I had at that time and I put it into bullion and those certified coins. And that's the last that I did with it. So, when you're asked, are you trading silver? There's a huge difference between being very active, especially in that futures product, which is huge, even the ETF, that's kind of like I was telling you how day trading and swing trading really separate those two thoughts and do the same for precious metals. And for me, I just invest in those. I have the stuff that I set away. And, from 2014, it seems so long ago, right? But the years pass and here it is, doing so much better. So that's been a great investment. And then I don't really trade it. I trade SPX, Nvidia, Tesla, that kind of stuff.
I think the last trade I had I haven't traded the futures in silver in since 2014 or 15. And the last trade I actually had was an SLV. It moves so slow relative to silver that and then it's a wild child. Like it does nothing and then it suddenly wakes up and you're, down 50%. Like what happened? Yeah, I just don't trade it anymore. Sam, have you traded in any?
No, I haven't traded silver. The last silver transaction that I had is rather famously sold the rest of my silver at 44, only to watch it go to 125 in like 2 months. She was a very nice lady though, so she deserves the money. Is the way I look at it. No, I haven't been trading. I've been focusing more on gold. I just think I have a cleaner read on it. It moves more. So the way I always describe it is kind of like a dog's tail versus a cat's tail. So like the dog's tail is very rhythmic. It's like a metronome. That's more gold. That's the way I see it at least. And then the cat's tail is kind of, all over the place, very robotic and awkward, more silver. So no, I really haven't focused on it that much. I'd like to. Maybe I should focus on it a little bit more, but just you know, 15 years of trading has taught me mostly to avoid it. So if I see a setup in silver, I just usually immediately go to gold.
Yeah, the only way I trade it anymore is with XME because it's part of that. Otherwise, no. There's a question for you, Henry. It's interesting that lately you've been trading SPX. Can you discuss how you choose the delta and the expiry for 0 DTE versus 1 DTE and what you use for entry and exit? Just as a general.
Sure, yeah. So it's a very good question, and it adds something that I've gotten into more in recent years. I would say that 99% of the time I am using 0-day expirations. There have been a few times that I wish I would have chosen the 1 day, because you can really have the right idea, and then the end of day can just be a washout or the opposite of what you thought. And then the next day it goes on to complete your intention or to get to your target. So there have been a few times where I wish I would have done the 1 day just to give myself that little bit more leniency, but I'm usually focused on the 0 day. And then from there, how I look to get into trades and the deltas that I choose. The two, and I use David's voodoo lines quite a lot because those are incredibly helpful. But the biggest and best levels will not come into play every day. Like a fire line, a tree line, you may not test those for months. So they take a little bit of a back seat to the 0-day gamma exposure. When you think about how much notional value is going through options on a 0-day basis, I mean, I don't look at the percentage every day, but last I heard it was like 65% of options trading is 0-day. It's just really changed the landscape. So, with that, I'm looking at these 0-day levels, and then I'm using the ATR trailing stop and the reversal arrows If you're bearish, it's the close below the low of the high bar and the inverse for a buy. That workspace is available for free in the trading room. And if you are a follower of it, if you're familiar with this conversation, today was a great day to look at it because you can look at the S&P futures, and if you're using a 3-minute chart, which is generally a pretty small time frame, but you'll notice that that 3-minute was bullish all day. So if you find yourself fighting these moves or anything like that, just try to look at that ATR and make sure you're trading it in that direction. And then I just use those reversal arrows with that ATR flip against gamma strikes. And those are the 3 things I would give you that are the most helpful in actually setting it up. And then as far as delta, usually the delta 50s, right? Because the delta 50 is going to be the at the money option, and gamma is highest in at the money strikes. So you really try to perfect and get the hang of this day trading stuff, because it was always swing trading and doing delta 70s, and that's still good. But if you really follow this intraday, minute by minute stuff, and you've got a good signal, like say you're right at support and we're going to bounce, like just for the sake of this conversation, you're going to get a better bang for your buck buying that delta 50. And then if we rally 20 or 30 points, that option will really expand. It'll get hurt quickly too, right? But it's a very well-rounded question. I think I hit on each point, but use those 3 metrics to set up the trade and get in. Really watch those delta 50s, because when you get it right, they'll move the best. And I hope that helps with your question.
Do you use the micro voodoo lines in?
I do use the micros. All of David's stuff with the voodoo is some of the best studies I have found. I think the gamma stuff to me has just been a little bit more here lately, just because the options are so important. When they line up, I like it just that much more. But when you think about really short-term option structure, it is so often the 0-day map. So I will work to use them in Confluence, but those are what I found to be most helpful lately.
So there you go. That was from BJ, by the way.
Yeah, my pleasure. Great question.
That was a great question. I agree with you on the at the monies. I use it for everything. It's really simple. When I get an alert that says I need to get in, I don't actually have to go and look at which strike I was looking at. I just look at the open interest and take the at the monies, because you get the most bang for your buck. They don't cost you as much in premium, and they don't have to move that far to make some serious cash. I love them. Daniel Allen says he found the 3 minutes on the 0 TTE seems to be best. Other time frames are more unpredictable than levels. What do you use? So we know that Henry uses the 1 minute and the 3 minute with his ATR trailing stop. David, for intraday, what do you use?
For the most part, if I'm trading the indices, whether I'm doing it in SPX or ES, I am watching the ES futures, and I look at 2 things. I look at a 5-minute and I look at a 700 tick.
A 700 tick. Why 700?
Because it's worked well day in and day out with the indicators that I use with it, notably Ready, Aim, Fire and TrendSpark.
What? You mean it works, so you use it? That's crazy talk.
That is the simple thing, right? You find something that works and you keep turning the crank until it stops working, and then you stop using it.
Bruce, what do you look at? I mean, I know you don't do a whole lot of 0 DT unless it's end of day, but
Yeah, yeah, not near as much as I guess everyone else, but I use fib levels, and I will use a 10-minute. Yeah, of course, because I have them at my disposal. I use a 10-minute chart, I use a 30-minute, and I use a 120, and I like to see all of those line up and say the same thing and agree with voodoo lines on a small time frame, like a 1-day chart, whatever. And that's generally where I will take a trade. So I'll have timing for a high, timing for a low. It's a huge plus, and you have other things that line up that are saying the same thing. And I'll have a pretty tight zone if 2 or 3 of those charts line up and say the same thing. So that's really what I use.
Sam? for your intraday stuff? What time frames are you looking at?
Time frames, I'm looking at 15, 5, and 2. But if I were to recommend to most people, I would actually just use 15 and 5. The reason being is the 2 starts to cross the boundary in terms of noise relative to, you just have to have more experience. I always use the term that you have to earn your speed, right? And if somebody can't trade a 15-minute chart, they shouldn't even be remotely looking at a 2-minute. Things get more difficult as you go faster. So, or maybe more accurately, they get noisier, which makes it more difficult the faster you go. So the answer for what I use is 15, 5, and 2. But what I would recommend to most people, even myself some days, keeps me out of trouble, would be 15 and a 5. Actually, tomorrow in session, I'll show you guys a photo of, actually, you don't need, you could pull it up yourself. If you use Henry's trailing ATR settings on the ES on a 5-minute chart, it's been in a 5-minute trailing ATR trend for 14 hours. So much to his point, you don't really want to fight that, right? Kind of tying the two questions together in terms of time frame and what we look for. That's a big one. So for most people, I think 15 and 5 is a really good jump off point. And then once you've proven over time that you can trade those 2 time frames, then and only then would I consider something like a 2-minute, a 1-minute, or a tick chart.
And for those of you who are in the MTT, the Henry's charts are available on the shared charts, the free tools, the stuff that he's using in the room. There's a PDF there, and also the trailing stop is there, and the EMA that I use, the label that you all have asked about. So you've got a lot of tools there that are in the room for free. And if you're not in the room, consider a trial. I think we still have our $7 trial going. So yeah, trailing stop is pretty cool, and it's Henry style, so you can see it, and it's got alerts and all kinds of stuff we added to it. All right. BJ says, and there, Kim, the ATR trailing settings are in the, just pull it from the room drive. I know you're in there. BJ says, I trade the SPX only using 0DT and have used 30 delta a lot with a lot of success and make regular daily profits. Can you evaluate the difference between the 30 delta and the 50 delta? Well, I think he just did, BJ. The 50 delta is the at the money. The 30 delta, you're going to need a larger move to make money because it's out of the money. That's kind of the difference, right? So Henry's using the 50 delta because it's the best bang for your buck, and it's where the gamma is the highest.
Yeah, I would say, if you want to be systematic, and if it is working well for you, you don't have to dig too much deeper. Just continue to stay mechanical and just repeat your process in a way that is working for you. And then if you do want to dig deeper into that question, it's exactly what Lorna said. What kind of move are you expecting? Like, if you think that, wow, this thing is really sold off and we're at a huge area of support and I love buying it here, and we're going to get a 50-point bounce, well, then sure, do the Delta 30 and let it ride for 3 or 4 hours. It really is a good question because you dive into the complexities of, like, how much more time do you have in the day? If you only have an hour, buying that Delta 30 might be a little bit dicey. But say you're 2 hours through the cash session, you're at that, when the European session closes, and that's a big inflection point, and you're at support. Well, if you have the rest of the day to let it try to rally, well, then sure, that Delta 30 could be great. Buy 2 or 3, take one off kind of quickly to pay yourself and take some risk off, and then you let it run the rest of the day. Your Delta 30s can do great. But if you're just looking for a 5 or 6, maybe a 10-point wiggle, the Delta 50 is going to give you better directional movement.
There you go. All right, and we've got about 10 minutes left here, so let us turn to, of course, the thing that's on everybody's mind. NVIDIA's earnings are out. It was up as high as 200. It's back right down to where it was. What do we think?
I don't know. We'll just see. I mean, you either have your trades on or you don't, right? I'm not entering NVIDIA here. So I'm long NVIDIA. I have been long NVIDIA for, I have no idea how long, but a long time. I've got 200 calls sold against it. So we'll see. They take me out or they don't. I'm happy to let them have it at $200 plus what I've accumulated. That's part of that late cycle idea. I think you've got to be up here happy when you get a sustained bid for something to feed the ducks, let it go, and then try and get it back. So if they want to take my NVIDIA from me at $200 here on March 20th, they can have it. If they let me keep that additional premium as a cushion and we stay in the chop range that we've been in for a couple of months, I'm fine with that too.
So will you'll let it ride until March?
Oh yeah. Yeah.
Nice. Bruce?
Yeah, I'm long NVIDIA as well, out to 20 March as well, 200 strike price as well. So my thinking was, rather than doing, one for this Friday, 27th, give it a little time to work. If we, it's either going to work or it's not. Earnings, big gap up, gap down. So far, the gap has been up within some retracement back to kind of the, where we're closed, which is much better than the other way around. But I plan on holding it. And what I'll do is, and I'm looking at it on a chart up here, if we bounce tomorrow, we continue rally, I will probably sell some premium even above it, maybe call credit spread or something like that, depending on how much we rally and all that kind of stuff, to kind of cover some of the cost or all of the cost on the trade. But at this point, I'm planning on just holding it. And I have limited risk. So if it would have gone the other way, and it still might, we don't know until tomorrow. If it does go the other way, I have fixed risk. So
that's the best way to hedge, right?
yes.
Manage your risk. You have any skin in that game, Sam?
Yeah, well, not directly in NVIDIA, but I put on I started a pilot position on my QQQ short today. I'm looking to add more to it, but it's so far, the reason I've held off on the bulk of it is because I kind of had this narrative that I presented on Thursday of, well, I've already covered it, but it was basically fake peace deal, markets squeeze up. Mechanically, the Mag 7 were at the daily 200. I made a big point to talk about that. That's a bounce point. So far, we've kind of hit every single point that I've talked about. The third and final act would be NVIDIA beats, check. Tomorrow, market gaps, we'll see. And then what I'm looking for is a gap and a reversal Thursday or Friday. So I'm very specific with it, but that's how I'm playing it. I'm looking at the NQ. I was looking towards the 4-hour 200. It's overlapping with the yearly VWAP, comes in the 25,397 on yearly VWAP. So a little bit of an overshoot, a little bit of a grind up overnight, and then we'll see if the third and final act of this story that I've told you guys for a week now plays out. So if it does, NVIDIA opens up, Qs open up, and then they sell it. If they sell it, I'll send out the alert tomorrow for the bulk of the QQQ put butterflies.
Nice. You closed yours. You're still holding some, aren't you, Henry? I know you closed some.
Yeah, so I closed a couple of things out. I closed out one of my debits that still had a pretty decent value to it. I set up an additional unbalanced butterfly. Then I got some lotto tickets at the 210 calls. And in Tasty, I sold the $200 straddle. So I guess I've got 4 trades in total on. And, the whole hindsight 2020 thing, but it's like, man, the straddle was really the trade. I was a little skeptical of it because the expected move just struck me as a little bit smaller. But you got to remember that NVIDIA has been split so many times. It used to have, in your mind, you can remember these big dollar moves. Well, it's still having very significant moves from a market cap perspective, but it's not going to be the 20 or 30, it didn't have $100 move one time.
Yeah.
Those days are kind of behind us. And now just the incredible float, this huge market cap, usually going to keep it a little more under wraps. So I think I'll be okay on the majority of the earnings trades. And then to Sam's point, being very careful about that gap up. And then if it gives it all back, if it doesn't, and it can stay pinned and just hold that price, I think we continue to look to keep buying it. You know, you could even do the Iron Fly for this Friday, even though it'll get crushed out a pretty good bit. That might be a good short-term play. And then anything past that, I might just wait and see what Monday looks like.
It's it came right back down, but it did hit 200, so we'll have to see where it's going. It's slowly walking down now, but it's stopped. So we might wind up flat after all that. A huge amount of it. I have no idea what Jensen said, but yeah, Vincent said, they beat 5% and it came down. That's been happening a lot in earnings. The earnings themselves don't seem to matter anymore. It has everything to do with guidance, it would seem. Right. And if they say anything that's even slightly less positive, stuff gets crushed. So well, we're almost at the end here. Please, Jerry just posted the survey, y'all. So please fill that out for questions. Any other questions? Any other words of wisdom from you guys that you have for us? Nothing?
I guess kind of one thing I might add, and I'm still working on, really perfecting the way that I want to share this with everyone. But I think the addition of the Monday and Wednesday expirations are going to be great. Because in the past where you had to look at, stuff like these unbalanced flies and other more esoteric strategies, Thursday into expiration, right? Because that's where you can really kind of do the best with them. Well, now we're going to have that kind of opportunity 3 times a week instead of just having it the once. Now you've got it those 3 times. And I just feel like I'm really seeing it differently. Like if you take Tesla, for example, because Tesla was selling off pretty sharp, right? But then you have that put wall at 400 and they just rip it back up from 400. Then today, Wednesday, with an expiration, you see how it rallies up into 420 and then perfectly holds that as resistance. So you can take the long calls, like the 410s or whatever, and then when you pop to 420, either take your profits there, or if you bought the 5-day out, sell the 0-day, like sell the 0-day call against it. And it just offers so much more flexibility. So I've enjoyed working around those. I think they're going to be great. And I would just look for more trades on that in the near future.
Yeah, those are going to be really, really interesting. We were talking before the call started about the single stock futures that are nothing new. They tried them before. I think the game changer is really these, 3 times a week on the larger equities versus the stock futures. That seems to be something far more useful for retail traders. That's a great idea, right? A longer term calendar using those, but that's still just a week long. Beautiful. So Anthony asks, do you consider tax when choosing what asset to trade? SPX versus NVIDIA. Guess we'll end on that one. Anybody?
No. If I can make money and I have money to allocate, then I will put it to it. And if something will look, any strategy that makes money will have you will give you more money after tax, right? So some may require you to allocate more money to tax than not. And if I'm looking between two similar instruments, if I'm trying to decide between between two things that track the S&P 500 where the tax treatment is different, then absolutely I will choose the more tax efficient. But if I think that the only reason I'd ever go to an NVIDIA versus the S&P 500 is if I felt that it would be able to do something different than the indices. Otherwise, I'd be in the indices to begin with. So if I think I have a differentiated view of an individual name, absolutely I will go there, even if it's going to be taxed differently.
The way I look at it, if I'm paying taxes, it means I made money. It doesn't matter to me. It's cost of doing business.
I agree.
Anybody else?
Taxes are the result of a good thing.
Yep. Yep. All right. Well, so with that, I will remind you all once again that we have a webinar with JC coming up at, let's see, I have to do time math. 6 p.m. So in 90 minutes, holy moly, right? It's 4:30 there. So 6
Yes, it
p.m.
will be
Central.
90 minutes from now.
90 minutes from now, Bot has to go get some dinner. And we will see you all in the rooms tomorrow. Take a look at the survey that Jerry posted if you have other questions. And please enjoy the rest of your night. Thank you, everybody.
Thanks, guys.
Thank you, guys.